Today we're talking about home ownership, the steps to home ownership. What does it take? The first step is to get pre-qualified. What does that mean? That means to get some money from somewhere. So the money can come from a cash buyer, it can come from a mortgage company or a bank. The difference between the mortgage company and the bank is that a mortgage company primarily, mortgage company primarily focus on mortgages, whereas the bank and credit union, their secondary business will be a mortgage. Now that you've decided that you want to go with a mortgage company or credit union or a bank, you know what they're going to be looking for. So these people, they're going to be looking for a decent credit score. What's a decent credit score? So a decent credit score is somewhere in the vicinity of in the 700s, anything with a 7 on it. So can you get a house with 580? Of course. Is it going to be a lot of work? Of course. Do you want to buy a house with a 580 credit score? Maybe not. Maybe you might want to give yourself an opportunity to raise your score up a little bit more, so that you're able to get a better interest rate and have to answer less questions. You're going to need 2 months of the most recent bank statements or any accounts that have your money in it, whether it's a 401k, anything that shows a retirement account, anything that shows you have money. What it's going to do is help create a profile on your financial status. What do you look like on paper? Can you afford this house or not? And we'll talk a little bit more about that down the road. You're going to need the last 2 years of tax returns. Not only the tax returns, you're going to need W-2s as well. So you want to make sure you always keep a copy of those W-2s and submit them when you're submitting your tax returns. You're going to need the last 1 month worth of recent pay stubs, because they want to make sure that you're working. They want to see a history of your pay and so on. So now with COVID, there is going to be an employment verification call around 24 hours prior to you getting a clear to close. And that is because they just want to make sure you're still employed. We'll touch base about that a little bit further down the road. Now, there are two types of mortgages we're going to talk about. We're going to talk about an FHA mortgage and a conventional mortgage. And basically, the main difference between these two mortgages are, with the FHA mortgage, you can put 3.5% down as long as you don't have an active FHA account open, and you can, put less money down. They might be a little bit more lenient with your credit score, and that typically is the process or the direction where most first-time homeowners would take. The next type of loan is the conventional loan. And with a conventional loan, you're looking at somewhere around 20-25% down, a little less questions, easier process, less scrutiny when it comes to your inspections and appraisals, and it might be considered a smoother task. But if you're going to buy a $300,000 house, you need to have, and you want to do a conventional loan, you got to have 25% of that, and not many people have that money hanging around, especially if they're trying to buy a house for the first time, okay? And how much money do you need? So I have it broken down here into percentages, because everything works based off of a percent. So there's 3.5%, 5%, 10%, 25%. The 25% talks more on the conventional side. The 3.5 or 5 or 10% more on the FHA side. And with these particular loans, it really depends on where you fall credit score wise, what kind of house you're buying. But typically you would more likely be around 3.5% of the purchase price of the property in which you're looking at, okay? How much more money do I need? So you need closing costs. So the closing costs, give or take, and this is a rough number, is about 6% of the cost of the property. It could be a lot less than that, but I like to work with that number to give me an idea of what's closing costs. What's closing costs? So closing costs is all of the monies that it takes in order to close your loan. You might have to prepay for insurance. You might have to prepay for taxes. You might have to pay the attorneys, but you have to pay the attorney's fees. There are a lot of things that you need to pay, and that all gets wrapped into the closing costs. So you need to have that kind of set aside. monies for the appraiser. So the appraiser money, on average for a single family, even for a 2 or 3 family, let's say is around $700. You're going to pay for that, and we'll talk about that a little bit more. And then you need the money for the homeowner's insurance. Some banks might require you to pay 100% of that premium up front, and then in your monthly mortgage, part of the principal, interest, taxes, and insurance will be included in that. And that extra insurance money, which it seems like you're paying twice, that money goes into an escrow account. And within that escrow account, it accumulates, and depending on the municipality, when they're charged for taxes, the mortgage company would give that money out either every year, beginning of the year, or half the year, whenever that money is requested. So that money is kind of put aside for you in advance. And then you're going to need reserves. Reserves is usually about 6 months, 3 to 6 months worth of the cost of your mortgage. And it usually is only requested when you're purchasing a 3-family house. And that is because for 1 or 2 family house, unless you really have bad credit or some credit issues or some questions, typically they don't really want to see reserves. And what are reserves? So reserves is it's money. It could be in your 401k. It could be in a bank account. It could be anywhere. But that is your money. That is money that you cannot borrow. You cannot get it from a friend. You can't get it from a gift, nothing like that. That money is your money. And that money is not necessarily to spend. That money is to show, is just to show the banks that just in case anything happened, if you were to close on your loan today and you have an issue with your job, and you have enough money that can carry you for at least another 3 months. So that is kind of what that reserve money is for. Where can your contributions funds come from? So that means, where can you get money from? I deal a lot with a lot of West Indians in my day-to-day real estate transactions. And we know that in the West Indies, we have, some people call them the susu, some people call it throwing a hand, throwing a meeting money, whatever the case may be. That money is typically given to one group of people, then it's passed around to another group of people, and then from there, every week or whatever, there's a payout. That money cannot necessarily be used. So any money that you're going to be using for the transaction have to come from a reliable source. Reliable source meaning somebody's bank account. So I'm not saying that you can't get money from some person as far as a family member or something like that, but you have to be able to source that money. You have to know where that money comes from. You have to prove to the bank where that money comes from. Okay? So now I just want to go back through where we started, and then we'll just kind of talk about it a little bit more. So we got pre-qualified. We went to a mortgage company. We decided that we want to go with a mortgage company, and we give them the paperwork. We had them pull our credit score. We get them 2 months worth of bank statements. We've given the last 2 years worth of tax returns with W-2s, and we've given them the last 1 month worth of pay stubs. They've now issued us a letter called a pre-qualification letter. With that, they've determined that we're going to go with an FHA loan, so you only want 3.5% down. And they've made some basic calculations based on history and determined what your insurance might be, the insurance rates might be. They've determined maybe what your closing costs. So you have a general idea now of what monies you're going to be looking for when it's time to purchase this house. You've decided that you want to go a 1, 2, or 3 family. Let's say you do a 3 family. You've made sure that you have that reserves put aside, so now you're good to go. Okay, so now what do? You have to find a home and make an offer. And my question is, and this was a question that a young lady asked me just a couple of days ago. She says, Myles, how do I find a home? What do I do? How can I find a home? And so you can find a home many ways, but in my profession and in my line of work, being a realtor, my first recommendation is to find a real estate agent, okay? So you found a real estate agent. Real estate agents can come from anywhere, from a recommendation from a friend. It can come from research. It can come from anywhere. So friends, family, somebody recommend a real estate agent. You speak to that real estate agent. You give them a copy of your pre-qualification letter from the bank, and then you go ahead and you set up your search criteria. You're trying to determine what kind of home you want, whether you want a 1-family, a 2-family, or 3-family. You have to determine for your family size or for your future what you want to do, how many bedrooms you're going to want. You might want to talk about how many bathrooms, 1 bathroom. Somebody asked me the other day, what's a half a bathroom, Myles? And a half a bathroom is just an area where there's a toilet and there's a sink and no shower or bathtub, nowhere. So basically, you're just doing half the business. You're just going into the room and you're doing half the business. You're not doing the full business. You're not taking the shower when you're done, okay? So, and then you want to know what kind of house you want. There are a lot of styles of houses out there. I listed a few: Cape, colonial, split level. So there are plenty of different kind of houses, and you might not necessarily know how these houses are described, but you might find yourself driving in a neighborhood and seeing a particular house and determine that that's the house I want. I had a client recently, and his daughter said to him, "Daddy, I want a house that you can go upstairs." So obviously they don't want a Cape, because a Cape might just be 1 level. They might want more of a colonial style because they want to go up and down stairs. So you determine what kind of house you're looking for. Size of house. The size of the house is determined by a square foot. So the square foot is usually the living space square foot. So that doesn't count basement sizes. So you might have, unless it's a finished basement, they may include it in the square footage of the property, but for the most part, the house is just the living quarters: the living room, the dining room, the bedroom, the kitchen. Those areas, the square footage of it is calculated, and that's how we kind of list the size of the property. You might have an animal you might want, or you might have kids you want to run around on site, so you might want yard space. So you might be a person that might be 1 or 2 people, and you don't want to cut any grass. You don't want to do anything. You just want to be in the house and not be bothered. So you may not want a lot of space. So you have, and the list goes on and on and on. So you basically have to determine for yourself what kind of property you're looking for. What do you want within the property? Once you have those criteria put together, most real estate agents will send you emails, or on a daily basis. They might also do some searches for themselves, and once they see a house, they start to see if it's a match for you. And you go out and you look for a house. Eventually, when you walk into that house, you're going to know that that house is yours. You're going to walk into that house. That feeling is going to come over you. You're going to be like, yeah, I can see myself living here. The worst thing to do is look for a house when you're desperate, or you're in a pinch, or you're trying to do things very quickly. It might not necessarily be your best bet to find a house in that manner, because you're definitely going to be rushing into something that you may or may not be comfortable with down the road. So you want to make sure that you take your time and look for the house that that's going to work for you. Okay. So my next little point here, or the next step, is after you find a house, what do you do? Okay. So you found a house. What do? You have to make an offer on the house. And how do you do that? So the real estate agent will write up a contract for you, and that contract will have in what you want to pay for the house, what timing you want to work with, if there's any money you want back to help you out, whatever the case may be. So that offer is written up. You guys decide on whatever the offer wants to be. You want the offer to be, and you write that offer up accordingly. Once you have that offer written up, it's presented to the sellers. The sellers now, through the real estate agent, or they might be selling it on their own, they determine if the offer that you put to them is a good offer, is acceptable, or they might want a counter offer. They might say, you know what, your offer is too low, or I like your offer, but you want X amount of money back towards your closing costs. I don't want to give that to you. Can we work here, work there? So basically, that offer has to be negotiated on both sides until it's accepted. Once the offer is accepted, the final part, which completes contract law, is to make sure that there's some kind of consideration, and consideration comes in the form of a deposit, earnest money deposit. So it could be 1% of the purchase price. It could be a particular number, whatever that number is that you feel is reasonable enough to put on paper to say, hey, this represents my good faith deposit. This is what I'm going to say to you. I'm going to give this to you because I feel like this is a good number, and I'm going to give you a deposit. So, an example. Let's say you're buying a house for $300,000, and you're going to come in at 3.5% because you're FHA, and you might want to say, hey Yvonne, you might want to say that you're going to put down $3,000 at your earnest money deposit now, and maybe in another 3 weeks you're going to put down another $5,000, and then at closing you'll bring the difference, right? So that's kind of an example how that earnest money or that deposit is kind of worked around. So here we are. We went looking for a house. We found a house. We put an offer in. The offer was accepted. We give them our consideration. Now we got a binding legal contract. We're now under contract, under the terms of the contract, and we're now have to do our duty to fulfill our obligation under that contract as the buyer to make sure that we can satisfy the sellers and their conditions as well to make sure that the property goes, the purchase goes as instructed. So now, after the deal is accepted, what's next? And what does these people do and who pays for it? So who are these people? A home inspector. This home inspector, this person checks out the condition of the house. So pretty much you hire a qualified person that is governed by their license, known as a home inspector, to do an inspection for you. And that inspection is a whole inspection from top to bottom, and they're looking for structural, mostly structural issues, and anything to do with water, anything to do with mold, moisture, anything like that, the roof. So they pretty much are going to inspect from the top of the house to the bottom. They're going to inspect the driveway, they're going to inspect the garage, and they're going to put in a report all of what they found within that property. And every single property is going to have an issue. There are going to be things that you can live with and things that you can't live with. So you have to determine what you can live with and what you can't live with. So we'll touch base about that in a second. Also within the homeowner's inspection, he might also do a termite inspection. And most mortgages, especially an FHA mortgage, even if you don't do a home inspection, you're required to do a termite inspection to make sure that you don't have any wood destroying insects eating down the house, and the bank want to make sure that that's okay. And that even goes for the garage as well. Okay, you're going to need an attorney or closing agent. Some of you might be watching from California. In California, you use closing agents. Some of the parts across the country to use closing agents. In Connecticut, we use attorneys, and basically we hire an attorney to represent our best interests within this transaction. And the attorney's responsibility not only to make sure that we're okay, but to make sure that when the title or the ownership of the property is transferred from the seller to the buyer, the attorney want to make sure that that title is clean, that there's no person that can come back after you over the last 40 years that can say to you, hey, I own this house, or I have interest in this house, or something is going on within this house. So the attorney's responsibility, and is usually certified by an insurance policy as well, to make sure that there are no issues with that property. So you're hiring an attorney for that. Then you're going to need an appraiser. So the appraiser is hired by the bank, but you pay for it. So typically after you've had the inspection and you had some issues or no issues within the inspection report, and you and the seller and the buyer have worked out all deals, all situations with the inspection, then you're kind of in a good place now to call and order the appraisal, because you know that the deal is going to go forward. So when you pay for that appraisal, it usually is sent to the bank or whoever the funding person, because you may hire, let's say, First World Mortgage to as your lender, but then First World Mortgage, that's not their money. They might use Foremost Banking or whoever as a funding source. So whoever is a funding source would typically send you, they would typically send you a document for you to sign, and you go ahead and pay for the appraisal. The appraisal usually goes into a pool. It is the appraiser is chosen at random. That is how we're able to keep the whole business of real estate legal, and also legal, and make sure we have as above board as possible. So the appraiser's job is to go ahead and make sure that the money that you're paying for that property is equal to or more than the money that you're buying the property for. Not that you're paying for the property, because you could be buying a property for $300,000, you could be mortgaging only $200,000, but they want to make sure that that property is valued at $300,000 or more. So so the insurance company, the appraiser is there to make sure that that's the case, to make sure that the property is actually going to be worth more money or equal the amount of money as what you're going to be borrowing from the bank. So that's the job of the appraiser. The next person that you're going to need is an insurance agent, and with an insurance agent, that person is there to pretty much give you a policy that would secure you and secure the bank, just in case anything was to happen to that property. You cannot buy a property with someone else's money and not have an insurance policy on it. So that is very important to have. I want to talk about this next part here. Stay organized. So one of the things that is very important in a real estate transaction is to make sure that you stay organized with all of your documentation. So you might be asked for a document once, twice, 3 times, 4 times. It really doesn't matter. If you're asked for a document 3 times, give it to them 4 times. Don't murmur or complain about it, because somebody on another end is trying to make sure that they cover all of their T's and dot their I's to make sure that when they say okay, that you're okay to buy this house, that there's nothing that's going to prevent you or stop you from being able to afford this house. So whatever documents you need or is requested or you give, make sure you create a digital copy of that document and you put it in a folder online somewhere or on a drive or something, just to make sure that you have easy access to it, because just in case it's called for down the road, at least you have it again and the process is a little bit easier. I use myself Dropbox. Dropbox is a pretty safe, reliable storage environment, and within that Dropbox environment, you're able to store all the documents you need, pictures, home inspection report, everything that you need in order to make sure that anything that you need for this particular transaction and any other transaction, pictures, whatever the case may be. So if you can scan a document with it, you can take a picture with it. There's a lot of things that you can do. So by using an app like Dropbox, you're able to store your documents, and now you don't have to worry if any person keep asking you for stuff over and over again. Okay. So I want to go back and recap some of the things that we talked about. So we talked about now that you had first of all, we talk about where the money can come from. So your money can only come from a reliable source. It have to come from a bank. It have to come from a paycheck. It has to come from a savings account. Anything that is traceable. Okay. Uh, you can also get money from a friend in the form of a close family member in the form of a gift. They too have to source where that money comes from. You can get get concessions from the seller in the form of a give back. So an example of that, you might say, "Hey, I'm going to buy a $300,000 house," or you're telling the buyer, the seller, "I'm going to buy your house for $3,000, but I'm going to give 3.5% as my down payment. I'm going to do 3,000 as my earnest money deposit, and then when we're ready to close, I need you to give me back $6,000 towards my closing costs and prepaids." That's what is known as concessions or give backs, and that money will help cover uh, the home inspection that you paid for, the appraisal that you paid for, the insurance premium that you paid for. Even if you don't use all of that money, you can't put that balance into your pocket. For example, if you ask for $6,000 back towards your closing costs and prepaids, and you only use 5,000, you can't. You're not going to get a check at closing for an extra $1,000 because you only use 5,000. But what you can do with that extra 1,000 is use that to buy down your points on your interest. For example, if you're at 3.5% interest on your loan, you can use, and it costs $1,000 to buy a half of a point. You might be able to give the bank up front $1,000, and now your interest is only 3,000, but you've utilized 100% of that give back, the concession money that the seller offered to you. Okay, so that's a good, smart way of kind of utilizing it. Again, all funds must be verified. So you can't put $3,000 in cash in your bank account today and then tomorrow write a check for $3,000 and say that the money came out of your account, now it's verified. Now, the bank is going to want to know, where does that $3,000 in cash comes from? So now that kind of blanks out or knocks the that $3,000 out of commission. Now you can't use that money anymore. And whenever you're doing any transaction that involves your bank account, for example, the deposit check that you're going to give, the second deposit that you're going to get, anything like that, the bank want to make sure that that money clears from your account. So you're going to always have to make sure you make a copy of the front and back of that check before you give it to the realtor. And you want to keep that copy for yourself, and you want to make sure that you also get a transaction history report showing that money coming out of your account. So it's best to get a certified check from the bank, because in that way you show it comes right out, as opposed to writing a personal check. Now you have to wait for it to clear. But the bank want to make sure that not only is the money coming from that reliable source, but they want to show it being cleared from that reliable source, and they want to see a transaction history report that goes back 30 days from that particular day that you're doing that transaction, to make sure that there aren't any significant amount of money that added up over that 30-day period that would add up to the money that you just spent, or it's all broken down in a percentage, but basically they want to make sure that any monies that are within your account, they can verify it over the last 30 days. And if we remember, when we first started off, we talk about making sure you have 2 months worth of bank statements. So they already start off with your last 2 months worth of bank statements. And when you do a 30-day transaction history report, that's more than enough time to cross over that last 2 bank statements to make sure there's no lapse in any days within the bank, trying to make sure that from the time you process that mortgage in the beginning, that you have there's no lapse in dates over your bank statement. Okay, so far we've covered quite quite a bit of ground, and I'm going to pull up another screen for you so we can talk a little bit more about what's the next process. Okay. And again, if you have any questions, feel free to put them in the chat box, or send me an email or text me, or whatever the case may be, and I will make sure that I get those questions answered. Okay. All right. So do's and don'ts. This is a big thing right here. This, especially the don'ts, right? This is a perfect opportunity for you to crash your deal by not doing these things. So let's go down the list. Do not switch jobs. So if you know that you're up for you're switching jobs, you're going for a new job, even if it's going to pay more money, even if it's in the same line of work, even if this is something you've been looking at for a very long time, if for any opportunity you can delay that change in work history until after the closing, it's going to be better for you, because although it might be the same line of work, the bank typically don't like to see that, so you might want to slow down for a minute on that. Okay. Do not apply for any other kind of credit. So anything that involves using your social security number, the devil has a way of showing up at the wrong time. But you might be in the process of buying a house, and next thing you know, you realize that your cell phone doesn't work and you need to buy a phone. You go to whatever the phone company, and now they want you to upgrade your phone. You're upgrading your phone. You run your credit. Now you have a new bill that lowers your credit score. Anything can happen at that point. So try not to use your credit for the next 60 days from the day you started. From the day you have a signed contract. Okay. And I wrote here, do not buy a car. There are quite a few people that I've seen, you work hard to get your credit score to a certain level. Now all of a sudden your car is not efficient enough, or your car is making a noise, and you want to buy a house, or you want to buy a car, and for some reason your mind is telling you that the car is more important right now. You're going to buy a car and figure it out, and then buy a house. But you can't live in a car, but you can live in a house. So if you have to catch the bus, use Uber, whatever the case may be, just wait till when your transaction is completed before you go out and buy that car. In addition, you can write off the interest on a home loan, but you cannot write off the interest on a car payment. So if you can find a way to stuff the payment of the car into the house after you purchase the house, that's better for you, as opposed to buying a car. Now you have to scramble to make sure that your debt to income ratio isn't affected, and you have to make sure that you're still in a position to buy a house because you still qualify. Or typically most people will go to a car dealership to buy a car. They apply for a loan, and the car dealer pulls 8 or 10 different inquiries on your credit report, and now your credit report is out of whack. So please don't buy a car. Don't miss any payments that report to the credit bureau. So, if you're in a money pinch and you're close to buying a house, and you're at a crossroads whether to pay a bill that reports every month to the credit bureau or pay your rent, pay the bill, because you're not going to be kicked out of your house in 1 month. And in 1 month, you're going to be in your own house anyway. So any bill that reports to the credit bureau, please make sure you're not late with that. You pay on time, pay a little bit early. Just make sure that bill is paid up and paid on time, okay? Do not increase your credit card balances. So do not go out and splurge on curtains and new mattresses and a new dining room table, everything before you purchase the house. Now you had a $10,000 credit card at the beginning of the purchasing transaction with zero balance, which gives you a good score. And 2 weeks before you close, now you have a max out credit card. Something happened and the bank had to pull another credit report from you, and now your debt to income ratio is changed. Now your credit score is lowered, and now you're in jeopardy of not being able to purchase that house. So please stay away from the credit card for that short space of time. Do not reduce your hours at work. If anything, if you can increase your hours, work extra from the time you go under contract, if you can put in as much time as possible, that would reflect positive income on your weekly paycheck or monthly, biweekly, whatever the case may be. It's going to be better for you, and it's going to be better because at some point the bank is going to ask for an updated pay stub, and with updated pay stubs, it's going to show your money increasing, and that's going to be better for you, as opposed to typically working 40 hours. You got a little lazy. Now you went down to 24 hours for the next 2 weeks. They pull a copy of your updated pay stubs. Now your hours are reduced, and you look like you can't afford a house. So you don't want to do that, okay? Do not lose courage. So I see a lot of people losing their patience in the middle of home buying because, you have the realtor looking for information. You have the mortgage company looking for information. Typically, the mortgage company is requesting information from maybe 3 different sources. So you have 3 different sets of emails coming at you looking for documents. You're looking for information for the insurance person, and you're still trying to carry on your daily life, and you're nervous about whether you're going to be able to afford this house, whether they're going to give you this house. And I see a lot of people are very easy to give up, very easy to throw their hands in the air, very easy to say no, very easy to say this is too much work. But you know what? If it wasn't too much work, more people would do it. So I say, do not lose courage. If anything, get on your knees and pray. Ask the Lord to give you a way out. Show you, ask for the blessings of patience to come over you. Whatever it takes to make sure that you fight that fight. Because at the end of the day, it might be only a week away from you being able to close on that property, as opposed to you throwing your hands up. Now you got to start over and do everything all over again. So please do not lose courage, okay? Do not tell anyone about buying a house until you close. And it's a big one for me. A lot of people get very excited. They put it in the atmosphere. Oh, I'm going to buy this house. I'm going to buy this house. And not everyone is necessarily happy for you, or everyone has an opinion. Everybody knows a great realtor. Everybody knows a great insurance person. Everybody knows it. And you've opened up now an opportunity for questions and comments and suggestions and everything to come at you from every angle. You want to kind of stay away from that. The best thing to do is keep your mouth shut, go along with the process, and when you close on that property, the people that you really wanted to tell about that house, invite them. Hey, listen, come with me over to XYZ address. I want to show you something. And the best thing you can do is put that key in the door, smile, and say, hey, listen, I just bought this house. That's the best way to do it, as opposed to going out there and putting it into the atmosphere, okay? Here's another thing what you need to do. You got to respond promptly to all the requests for documents. So you might ask for a document today, or it might be, let's say, Thursday afternoon at 4 o'clock. And you can take 5 minutes and produce this document, or you can say, you know what, I'm going to leave it till tomorrow. Tomorrow comes and you forgot about it. Now it's Saturday, it's Sunday, and now Monday you're now producing this document. The document could be an updated bank statement. It could be a better copy of your driver's license. It could be a copy of whatever the document is. But you were asked for this document on Thursday, and you're producing it on Monday because you feel like maybe Monday morning is the beginning of the workday. I'll catch them again. But when you deal especially with a mortgage company, they don't really stop working. So at 9 o'clock at night, somebody is still crunching away your numbers. On a Sunday afternoon at 2 o'clock, somebody is still crunching away your numbers. So I like to play tennis. I like to make sure the ball is not in my court. So If you ask me for something, it's like playing tennis. I knock the ball right back into your court, so I know now that it's not on me, it's on you. And I think if you adopt that same approach and make sure that when information is requested, you give it right over. You get it out of your way. Whatever it is, like I said, even if you're asked for that information 2 or 3 times, just give it up. Because at the end of the day, within a short space of time, you're going to be a homeowner and you're going to achieve your objective. Okay? Let's go back through our little checklist. So, the mortgage application was submitted. The inspection was done. The commitment, which is when you put that purchase and sale agreement together, you told them that within a certain time, you're going to have an official document from the bank or the mortgage company or the lending institution, rather, saying that you've met most of their sniff tests up until this point, and they're confident enough to give you what is known as a commitment letter to show the sellers that we're really going forward. So that commitment is done. The appraisal is done. You already got the insurance binder, or whether it's paid in cash or you show a receipt for that, or whether it's going to be paid at closing. But you got your insurance obligation taken care of. Disclosures are signed. Disclosures are just the official documents from the bank showing that all the numbers pertaining to your transaction, making sure you recognize the numbers, you understand what the numbers are, and so on. That's done. Because of COVID, they might do 1 or 2 employment verifications. The first one might be a written employment verification. The last one might be a verbal, just over the phone saying, yep, he or she still works there. And your lawyer is happy, your attorney, on both the buyer and seller side, everybody's happy. So now, as long as you meet all of these requirements, you're then given a clear to close. What is a clear to close? A clear to close are the three happiest words that any realtor want to hear. Clear to close, and that means that everything is done. All the paperwork is over. The final part is just there to sign. You've met all your obligations. Everybody is good to go. However, although you've been issued a clear to close, the deals still have an opportunity to fall through. So you still want to be on your P's and Q's until you're at the closing table and you actually wet sign that mortgage document with the attorney or the closing agent. Now the deal is done, okay? So, but you want to hear those words, clear to close, right? Now, congratulations. You will sign all the documents, pay your balances, and become a homeowner. The overall process should take about 60 days. From the time the contract is purchased, the purchase and sale contract is signed and executed. So congratulations. So I've just gone through in under an hour in basically a compressed form of what it takes to buy a house from start to finish. Okay, at any one time throughout the process, you're going to have give or take about 40 people working on your transaction. So although you might only hear from the real estate agent, you may hear every now and then from the attorney. You might hear every now and then from the bank, whoever is on the bank side. There are teams and teams of people that are doing all of their due diligences to make sure that you are qualified for this purchase. So there's a lot of work going on behind the scenes to make sure that that this process is done well. And if you have any questions, you can start shooting them now, or you can send me a text or email. But I'm going to run through the list one last time, and I want to thank everyone for tuning in. I'm going to repost this same interview or the same Zoom call. I'm going to repost this to my YouTube channel, and it will also be on the Facebook pages that is listed on now. Pretty much you can use this as a reference in 90% of the cases across America in order to go ahead and purchase a home. Okay, so I'm going to run through these real quickly. Steps to home ownership. First, you got to get pre-qualified. You got to find some kind of a lender to do that. You got to gather up your documents, all of the documents you need. You need a decent credit score. You need 2 years worth of tax returns. You need 1 month worth of pay stubs. You need 2 months worth of bank statements. There are two types of mortgages that you may or may not fall into. It's FHA and conventional. Then you're going to need money for your transaction. You're going to need about 3.5% of the purchase price as your your down payment amount. You're going to need closing costs that can come in the form of concessions from the seller. You're going to need money for your inspector. You'll get that back at closing. You're going to need money for the appraiser. You're going to get that back as well. You're going to need your home insurance agent to give you a policy. You may or may not have to pay that up front. It depends. And depending on if you're having a 3-family property or if your credit is questionable or if they just decide to ask, you might need some reserves for that. Okay, that could vary from 3 to 6 months worth of the value of running that particular property for that period of time. Okay, where can your monies come from? Your monies have to come from a reliable source, something that's traceable. So that's a bank account, a retirement account, immediate family member in the form of a gift. It can come from the seller in the form of concessions, and all monies have to be verified, no cash. Okay. How to find and make an offer? You find a realtor, a real estate agent. You determine with that person what works for you. You guys go hunting, looking for the house. Once you find that property, what happens next? You put in an offer. The offer is either accepted or counter offer. If it's counter offer, then you counter the counter offer, you accept the counter offer. And then from there, you pay the consideration, which is X amount of money, whatever you decide upon, and that's your good faith deposit. That shows that now you have a binding contract. After you have that binding contract, what's next? You need to get a home inspection. The home inspector is there to pretty much inspect the house for mechanical issues, anything that's going on, so he can give you from a professional perspective what's going on with the house. You need an attorney or closing agent. That person is going to represent your best interests in the purchase. Make sure that at the time of closing you have a clean title, and within that clean title, no person can come back, and I believe that titleship goes back to 40 years. No person can come after you and say they have any interest within that property. And you need an insurance agent to make sure that your best interest is secured should anything happen with that particular property. Okay? It's important to stay organized. It's important to keep a digital copy of all the documents that you submit to whoever pertaining to this property. All the documents that is sent to you pertaining to this property, everything that is requested or required of you that can be put in a digital format is, I suggest and recommend you keep it in a format that's easily acceptable. And for me, that format is someplace like Dropbox, which is easy to access from your phone or whatever the case may be. I have a couple of do's and don'ts once the process gets started, even before that if possible. Do not switch jobs. Okay, do not apply for any kind of credit. Do not buy a car. Do not miss any payments that reports to the credit bureaus. Do not increase your credit card balances. If anything, decrease them. Do not reduce your hours at work. And if anything, increase them. Do not lose courage. Please do not lose courage. Do not tell anyone that you're buying a house. It's easier to surprise them at the end, because at the end, it's very easy for you to bring them over and show them, as opposed to hearing 1,000,001 opinions throughout the home buying process, okay? Do respond promptly to all requests for documents. Every day really matters. You know, that could trigger another day, could trigger something. So always reply as quickly as possible when documents are requested. And then once the mortgage application is submitted, the inspection is done, the commitment date is gone, and we've satisfied that. The appraisal is done, the insurance binder is done, the disclosures are signed, employment verification is signed, lawyers are happy, you're ready to buy a home. So that is basically a nice little rundown. I really took my time and wrote this out for you as much as to make it as simple as possible. Just to let you know that the home buying process is afforded to everyone. And we talk a lot in this country about equal opportunity, and equal opportunity for me means a little bit more than a company deciding that they're going to hire X amount of percentage of X amount of kind of person because they want to meet that equal opportunity quota. For me, an equal opportunity is some person fighting for you to make sure that you have what it takes to buy a house, okay? So that person, in my opinion, is going to fight for you, make sure that you know, if the bank said no, look for another way to say yes. If you can't find the funds in one way, look for another way to find the funds. If you can't, whatever the case may be, you want to make sure that you have some person that's going to fight for you to always give you that equal opportunity edge. You want to make sure that you're not that person that's going to, that you don't have that person in your corner that's not going to look out for your best interest. Okay, so if you have any questions pertaining to home ownership, pertaining to the process, pertaining to anything that we talked about, feel free to reach out to me. I'll leave my email here on the page, and you can always feel free to reach out and send me an email, and that's chefmyles@gmail, or you can send me a text. My phone is text friendly, and that's 860-305-0009. So feel free to send me an email, send me a text, put a phone call to me, hit me up on Facebook, hit me up on YouTube, whatever the case may be. And let's do this. Let's make 2021 an awesome year for home ownership. Anything that I can do, I'm happy to help you. And then thank you guys for tuning in. If you have any questions, I don't see any questions in the chat box for now. So if you have any, just let me know. We'll make this work, okay? So thank everyone for tuning in. This is Chef Myles. Again, my phone number, 860-305-0009. You can send me a text, ask me some questions. You can send me an email, chefmyles@gmail. And I appreciate you tuning in to this Wednesday afternoon or this evening session of how to buy a house. What does it take to buy a house? And as an equal opportunity person, everyone is afforded the opportunity to be a homeowner. Thank you.